hit the button. Okay.
Okay, now we are recording.
Okay. We will start with Michael, and then Mihaela, and then me. And as I said, if you have any questions during our presentation, it would be great if you write them so that you don't forget it. And why we settle like this? Because, as I said, we will have opportunity to answer your questions like a team. So maybe we will have special ads from each part, so that we assume it will be the best. So we're starting with Michael. Michael, the stage is yours. So you can start.
Okay, thank you everybody, and thank you for the introductions and giving me some idea of what you're expecting. I like that notion of me talking about black magic and the black magic of valuation. I think valuation is one of these things that can appear to be a dark art because there's so much jargon, and I'm very interested in taking the mystery out of it, so that when you're founding the business, or if your business is going for a while, just really today I want to really explore what the three dynamics are that influence the valuation of any asset. Clearly, I'm primarily talking about the value of the shares in your business, or the value of your business. That's primarily what I'm looking to share with you. And so hopefully that will be useful. It'll be great to get questions and answers. As Goga was saying, we're not quite sure what you do know. And so for those of you that might have done an MBA or worked in finance.
Sorry, Michael, when you lean a little bit forward, it's much better voice quality. So if you can do.
Okay.
Oh, great.
Thank you for the tip, Goga.
Yeah. Because
so
you did this a little bit lean, and it was huge difference. So if you can stay like this, please.
I've got it. Okay. So yeah, so some of you may be familiar with some of this. For those of you that are more familiar, you can just really start thinking about what questions you have that we could go deeper in the Q&A in terms of really applying this to your own business. By way of background, I worked for 16 years in the City of London as an equity analyst, 10 of those years in an investment bank. And so I'm very used to working on valuation. I've written on valuation and the Financial Times Guide to Making the Right Investment Decisions, quite a tome. You don't need that. I think if we can just kind of focus on what really drives things. And since leaving the city, I've worked in primarily teaching finance, but also coaching, NLP, which is how I came across Goga, and systemic coaching, which is a big passion of mine these days. So I'm just going to start sharing the screen. I should say at the outset that there's far more slides than I've got time for, but when I was editing them, I felt that you are welcome to these slides. The ones we don't cover might be useful to you just to read and to serve as a resource. So I'm just going to share screen now. And just in terms of the outline, when I was considering the order, I think in your position, starting out with a business, it's very, very important to be very clear about your strategy. What is it? What are the key ingredients of your strategy? And indeed, what strategy is and what it isn't. From a valuation perspective, when we talk about strategy, it is simply what is your competitive advantage? what differentiates you from your competitors? And that source of differentiation is something that you really want to cultivate, because that's what gives you your uniqueness. So when we talk about strategy, we are really talking about what makes you unique as a business. And of course, being unique in itself, whilst extremely important, is not enough. You've got to have a uniqueness that people are prepared to pay for. And that's the competitive advantage piece. What is it about you that allows you to add value in a way that I'd be prepared to pay for the services or goods that you provide? And so this is kind of, in a way, marketing 101. But what in your position would be very, very useful, I think, during the course of what I'm talking about, is really applying this to your own business. So if you've got a strategy, how simple is it? How clear is it? If you've got a strategy, what is it within your business that allows you to know precisely where you add value? Of all the things you do, what are the key things that add value, and how can you do more of those things and less of others? Using that as a base of understanding in terms of strategy, we'll then look at the 3 key drivers of valuation. We'll then look at shareholder value. And shareholder value is when anybody is investing in you or evaluating the value of your business, is what are the risks in your business? How well are you managing those risks? And are you delivering a return that, if I was a shareholder in your business, you would be compensating me for the risks I'm running in giving you my money? That's what shareholder value is. What's the return in your business relative to the risks of your business? And again, the more you can be comfortable identifying precisely what the risks are in your business and precisely how you're managing those risks, the easier it is to convey that to potential investors, and investors will know that you are running the business in a way that serves them. And then finally, we'll look at a few key valuation metrics and some rules of thumb about how you can value a business. What do the markets do? The markets, in effect, and what investors are doing all the time, is they're allocating capital and pricing risk. That's what we as investors are doing. That's what a stock market is doing. So in effect, what the share price or valuation of your business is doing is pricing the future. We're looking into the future and we're trying to predict the prospects and cash flows of your business in the years ahead. Conventionally, in a stock market sense, we would look 18 months to 2 years ahead. Clearly, for a business that's in a startup phase, you really want to be having realistic forecasts as best you can. This is one of the big risks, is how do we forecast the future when there are so many unknowns, so many variables, and you're just starting out. Nonetheless, we have to make projections of cash flows in the years ahead, and we'll come back to that. One of the problems with the financial crisis back in 2007-8, and I remember that period well in the lead up into that, is that what a lot of large companies, forget startups, a lot of large companies in the United States and the UK in particular, were obsessed with growth. It's all about how can we grow. And the problem with that is that growth isn't the be all and end all of the business, because you can grow and not add value. You can make lots of acquisitions that grow the business. But for those of you who remember that time, lots of those businesses that grew by acquisition and used debt to fund those acquisitions were basically increasing risk, because most acquisitions don't work. And when we take on far too much debt in an uncertain environment, that's a financial risk. So the point I'm trying to make here is, as well as growth, we really need to pay attention. What are the risks of that growth? What are the risks in the business? So growth and risk are the first two variables to influence your business, both of which I would be expecting, you know, if you were to present to me as an investor, I would really be drilling down on how you're managing the growth and how you're managing the risks of the business. So far, I think probably this is in line with what you expect. The third element of valuing a business is quality. And what do I mean by quality in this context? Well, two things actually, is that quality in the first instance means how easy is it to predict your revenues and cash flows? This is why, you know, you'll be familiar with things like annual recurring revenues, i.e., what are the revenues you've got that might be, for the sake of argument, on a subscription model, where there's a repeat fee or a repeat revenue stream. That would be high quality earnings, because I can predict over the next 3 years precisely what your revenue and cash flow will be. Conversely, you know, if you get a one-off contract and it is just a one-off, then the quality of earnings, because when that contract is over, I don't know where the next contract is coming from, I don't know who your next customer is, the quality is low because I can't predict your revenue stream. And clearly when you're starting out, this will be difficult. You might get one contract that's not replaced, and then it may take you a little while as you're establishing your position in the marketplace. But clearly the objective is to try and build up the quality of your revenues, the quality of your cash flows, by getting a more predictable source of cash flows and revenues. Now, one of the ways of doing that is the business model. Is it a subscription model, for example? That's very, very popular with, you know, digital and online things. You know, I'm using Zoom now. I pay them, you know, every month, or every year, and I'll continue to do that. That's why someone like Zoom would be valued highly, because it's high growth, low risk, and high quality. The other dimension of quality that's really important, and that comes back to something I was just saying previously, is what we mean by quality in the second instance is not just, are revenues predictable, but do those revenues convert into cash? Because if you look at most financial scandals that have affected big companies in the UK and the US in the last 20 years, those scandals have invariably been around the accounting for the business, because what the accounting has done is to try and reinforce how quickly profits are growing. So because there is this emphasis on growth often in the stock market, what companies will do is say, well, actually, we need the business to grow, therefore, we'll start looking at our accounting policies and make those accounting policies, shall I say, flexible. We could use fraudulent, but we'll say flexible for the time being. And what I mean by that is that, you know, I might have a recurring revenue stream for the next 3 years. And if you think this is an abstract concept, this is what Xerox did. Because when they were selling photocopiers and they had big contracts for servicing and maintaining them over 3 years, if they got a 3-year contract, they would book all that revenue into year 1. So of course it would look like fantastic growth, but it was just an accounting gimmick, basically. And how do we detect this? Well, if I have a contract with you for 3 years, and I book all the revenue for those 3 years, you only give me the cash for 1 year. So can you see that the revenue doesn't convert to cash in the cash flow statement or in the P&L? So people like me, you know, who are equity analysts, or if you were talking to private equity folk for the same reason, they'd probably be even more diligent than I would be. We would scrutinize your numbers to look at the relationship between profit and cash. And the weaker the relationship, the lower your quality of earnings. We need the revenue profit of the business to convert to cash. And that's, again, at an early stage is tricky, but it's just something to flag at this stage, that this is really what valuation is all about. That dynamic between growth, but it's not just growth, the risks that you're incurring, because I'm giving you money, which is then at risk. And we'll come on and look at risks in a bit more detail, and quality, which I've already just given a sense of. This is an important slide that just really echoes what I've just been saying, that growth isn't a strategy. The strategy is, what are you doing with your business to be more competitive? And I keep emphasizing that because most large organizations will talk about how do we grow. It's the wrong way round. The question you should be asking yourselves is how do we become more competitive? How do we provide a better service? How do we innovate? How do we reduce costs? How do we serve the market better? It's from doing what you do really well that generates growth. You don't target growth. One of the things that I see in many organizations I work with is it's a bit like they manage growth rather than managing the business. And it's almost as though if I'm managing the revenues of the business, I'm looking through the wrong end of the telescope. Your role, and particularly if you're founding the business, this is just so vital that your responsibility is to focus on your strategy, to be more competitive, to manage relationships in the business, to manage the culture that allows the growth to happen. The profit is then effectively, if you like, the applause from the audience for you doing what you do well. But you don't manage the profit, you don't manage the growth. And again, I've already referred to this. I've used these slides from Jim Collins's book, Get Good to Great, because it's one of my favorite business books. If you're interested in, really understanding how you move from good to great, it's a very, very well researched and very, very good book. It's for larger companies primarily, but I think you'd learn a lot from it. But again, what he's saying is the tricks to have are clarity and simplicity. And from my perspective, when you're talking about your strategy and your investment story, I just want to know about the market and what makes you competitive. Most investors won't necessarily want to hear all about your technology. They'll want to hear about what makes you different and what allows you to tell your story in a compelling way is if it's simple and effective. The shorter you can make it, the better. And that's the other thing is that I really want you to sort of be aware that what we're celebrating today, in a way, with you is your uniqueness. It's not about you copying anybody else. It's about you uniquely doing what you can do and what no one else can do. Because if it's unique to you, competition won't be a problem. So competitive advantage, why is it so important? Well, what an equity is a share in the competitive position of the business. If you were to plot a share price relative to the market share of a company over a long period of time, then you would see a very strong correlation. And one of the things that I think is really important, and I think ideal for you at this stage when you're starting off, I've used Apple and Southwest Airlines, SWA is Southwest Airlines. I've used Apple and Southwest Airlines as examples simply because they've just been such profitable investments over a very long period of time. And Southwest Airlines and Apple, I think, are important because all of their growth has been organic. They haven't relied on acquisition. They haven't grown for the sake of growing. They've grown because they've been very clear about who they are. They've been very clear about their values, very clear about their strategy, and the organic growth has emerged out of that clarity. And so what makes them different is that pure focus on getting it right throughout the business. They're completely aligned between purpose and values, behaviors. All of that is really aligned. And I think one of the things that I'd like to share, because I think it's relevant for where you are, is that they both had, if you like, what we would call a challenger mindset, Because if you think of Southwest Airlines, between 1972 and 2002, this was the best performing equity on Wall Street, the best performing share over that 30-year period. Now, it's an airline. It's an airline. It's not a technology stock. It's not an electronic stock. It's not a pharmaceuticals company with really new innovative products. It's an airline. And it's an airline at a time when all of their competition was in Chapter 11, which is essentially the American equivalent of being insolvent or being bankrupt. And so the rest of the industry were having massive problems. And Southwest Airlines just went from strength to strength. And that's the advantage of a challenger mindset, because what they were saying is well, if the industry can't make money, its economic model has got to be completely wrong. So we will be completely different about what we do. That uniqueness will be completely different. We'll be low cost, we'll be reliable, and we will really, really please customers. And so that challenger mindset, I think, is all about they're not necessarily innovating around technology, but they're really innovating around the economic model of how you run an airline. So the creativity and innovation was very, very high. So interestingly, these two companies would also be very great examples of what great branding is. Apple is often held out as one of the biggest and best brands out there. And again, that branding comes from celebrating the uniqueness, celebrating that challenger mindset, celebrating that radical way of doing business. And so they're really, really interesting case studies to use. And what do investors love about these companies is that those sustainable high returns. And what's the significance of a brand in this context? The brand implies that you've got high barriers to entry, i.e., because you're being unique, it's very difficult for people to copy you. Because what you've got to remember, if you think, oh, this part of our market is really growing and it's growing rapidly, that might fulfill the growth component of valuation. The problem is that growth on its own attracts a lot of competition. And so what tends to happen in a lot of industries that are high growth is so many people come into the industry that they compete away the returns. So what's different about you? What allows you to create a barrier to entry so that you can determine your own pricing? Because when I talked about quality of earnings and the predictability of revenues, one of the key things around that is, of course, the capacity to influence prices. So are you a price maker or a price taker? Now, clearly, when you're starting, you may be a price taker because you've got to get product recognition, you've got to get those contracts. I get all of that. But as you build up, again, being radical with a challenger mindset, the more control over price you have, the higher your valuation, because it reflects your quality of earnings and it reflects your competitive position. So just some slides for you on companies that thrive. I thought they would be useful to include, but again, linking up with what Mihaela and Goga will be talking about later, companies that thrive have a strong, positive, values-driven culture. And I think that's really vital. And a values-based approach to measuring performance. So when you're measuring performance, really, you've got to know what are the economic drivers of your business. And that's not likely to be EBITDA. I know in most conversations I have with businesses, everyone talks about EBITDA, but EBITDA may or may not be a good measure of your performance. So you really need to think about what performance measure captures your competitive advantage, captures your value added, and captures your role in a system. And given I've talked about a challenging mindset, I've included a slide here that are just some of my beliefs about a challenger mindset. You will have your own. You'll have your own brands you like, your own companies that you really like, and the attitudes and values they display. And one of the things that I think will serve you as founders and builders of businesses is that I think that people like Apple and Southwest Airlines, one of the convictions, and this is almost like deeper than a belief, if you like, we'll be talking about values and beliefs later, but a really strong conviction that you hold in your body, that you really care about, is that the business that you're developing is based on the fact that the consumer or a part of the market you serve is not being served well by the existing players. You know, the consumer is being taken advantage of. They're not being valued. Their potential is not being respected. They're being ripped off. Because Southwest Airlines comes in and says, well, you know, airfares are far too high, customers are being ripped off, and the industry is in bankruptcy. So there's that radical conviction that the market and the consumer is not being properly served. And so those are just some of the things we've been talking about. And the Southwest Airlines, again. But one of the things I will say, because it will manifest later, is that a key to Southwest Airlines' success is the alignment between a clear purpose, a business model that rigorously supports that purpose. So everything they do, every aspect of their systems and organizations and linkages, they actually have maps of all of this. There's some great work and case studies on how everything within the business is mapped onto the purpose of the business. And they consistently are aligned with the core values and behaviors of the business. And then these are just some of the things that made them such a success. And again, I think this would be a great model of clarity with respect to a clear purpose statement. Our purpose: connect people to what's important in their lives through friendly, reliable, and low-cost air travel. Our vision: to be the world's most loved, most efficient, and most profitable airline. This is all great stuff. And on this, of course, we're talking about culture as well. And from the very outset, one of the key things is, again, I think this will be picked up later, is as founders, it's very important for you to determine which stakeholder do you want to put first. Because we all talk about stakeholders, but one of the interesting things that's radical with Southwest Airlines is they're saying, actually, we're not going to put the customer first, which is quite unusual amongst many companies. They're saying that first and foremost, we make our employees happy, because if they're happy and we take care of them, they will take care of the customers, and the customers then keep coming back. So you can see this is really important. Do you want to really focus on the customer, or do you really want to focus on employees? And all I'm saying is that you have that discussion and you consciously choose which it is, because this is a big part of Southwest Airlines' competitive advantage. And this is a picture of Warren Buffett, the most successful investor in the last 50 or 60 years now. I look for economic castles protected by unbreachable moats. So when I was talking about the barriers to entry, the moat is effectively a barrier to entry. And in view of time, I won't go too much into strategy, but if you want a kind of a deconstruction of the elements of strategy, there in your pack, and then just some ideas for you to start thinking about in terms of if you want to make a strategy statement that would appeal to investors. These are some of the things that I would expect if you were presenting your strategy. So growth we've really talked about. I think it's straightforward. We can see that I just want to make a decision. When I talk about organic growth, I simply mean that your business is growing through pricing power and taking market share. So it's organic to the business. It's not through, the difference would be growing through acquisitions, which would be acquisition-led growth. So the market obviously prefers organic growth because it's lower risk. Acquisitions involve a lot of risk. So again, being very clear about how you're going to take growth, how you're going to take market share, and how you're going to protect your market share. And I've talked about this already. It's, we could have growth in revenue, but if that doesn't lead to growth in cash, investors are not going to be impressed. So really, does the revenue convert to cash? Again, I know I'm a gramophone record on this, but it's so important. The other thing is we need revenues to be growing, because of course, if you just grow by cutting costs, that's very much a one-off. It's not growth. I cut costs from 80 to 60. That's a 20 increase in profit, but it's not growth. And here is what I would determine high value growth, growth off a low cost base with a scalable proposition. And you guys will be more familiar than me about scalability, but scalability simply means that you can replicate your activities without further capital. You don't need more capital to scale your growth. And again, I think that's quite a compelling slide, just in terms of you really thinking about all the things we've talked about so far and how you can focus on growth that will really deliver value. Organic growth. Again, you probably are not at the acquisition stage, but you may be at the stage where you're being acquired or thinking of being acquired. So you might want to spin this round and think about it differently. And with respect to risk, we have different elements of risk. There's just simply the risk in the business of you finding that the external conditions change and your operating profits and cash flows come under pressure and your competitive strategy is not working. Financial risk is simply a function of how much debt you have in the business, but also how sensitive are your profits to changes in turnover will affect your financial risk as well. That would be a different workshop. And something, again, for larger companies, but this is why values are so important, is reputational risk for larger organizations these days is one of the biggest risks there is. And again, some of the factors that would drive risk, if I was an analyst looking at your business, it's not exclusive, but would just give me a sense. And not following your values, I think, is a very important risk because that will affect your reputation. You could think about perhaps VW in the diesel scandal, not following their values and the impact that's had on their brand. And again, a useful risk matrix from the work of Robert Simons. One of the things there you can see that I think is really important is that if you're putting a lot of pressure for performance on the organization and you're growing very, very quickly and you've got employees that aren't used to that rate of growth, that is creating a lot of risk within the organization. And these are just some of the red flags in my experience. Dominant CEOs, weak corporate governance, and being very aggressive with growth targets. And there's a lovely Warren Buffett quote, management that always promises to make the numbers will at some point make up the numbers. Again, if you start kind of adjusting your accounting to make your growth record look better than it really is, and your margins are high, there's a saying in the stock market, if it looks too good to be true, it's not true. And quality, I think I've really used and covered in the introduction, but again, just to show you that there's information in the pack that may be of use to you when you start thinking about these things later. But at the end of the day, you'll be well aware that any investor, and indeed yourselves as business people, really it's the cash and the cash generation that tells the true story of what's going on in a business, because the cash is what allows you to pay your people. The cash is what allows you to invest in the business, because if you don't invest in the business, you won't maintain your competitive position, and the cash will pay a dividend for the owners, including yourselves. And shareholder value, I've really talked about this, is generating value. When we talk about a financial surplus in excess of cost of capital, the cost of capital is simply, in very simple terms, the risks involved in running your business. If you're a high risk company, your cost of capital will be higher. What does that mean in practical terms for you? It means in practical terms for you that even if you're getting a loan, if you're very, very risky, the lender will want a higher interest rate from you to compensate them for the risk. So again, being very clear and understanding about your risks. So but the debt holder has got a better chance of getting their money back than an equity holder who runs more risk, so they'll want a higher return from you. And that's just it in a very simple nutshell. And so valuation then is really a synthesis of these things which I've talked about. It's that combination of growth, risk, and quality that drives the value of your business. And given the emphasis I've put on cash flow, I don't want to make this mathematical, but if you ever get to the stage where you're working with private equity funds or venture capital funds, often what they'll do is what's called a discounted cash flow of your business. And that just simply is projecting your cash flow over, say, a 10-year period and bringing it back to today's money to determine what your business is worth today. And this is where the cost of capital that is used will reflect the risks in the business. So the more you can reduce the risks in your business, the higher that business will be valued. Can you see that that's then very important, because that cost of capital is the denominator for all your cash flows into the future. So to the extent that you can manage risk, that's as important as managing growth, because what can happen is we get obsessed with growth, but the more you can take risk out of the business, the more you're increasing the value of the business, because the cost of capital, which is a proxy for risk, will be lower. Clearly, the problem with DCF is, what are our assumptions for the future? And again, that could be a different workshop in itself. But again, as you're probably familiar, there are a lot of risks in projecting your cash flows in the next year, let alone going out to year 5 or year 10. So it's a very complex process. It's a very risky process, particularly in the startup phase, because we don't know what market share growth you'll be able to achieve, whether you'll get funding, whether you'll manage the people side, so, and I work with an entrepreneur founder in Ireland, and he always talks about an acronym called SPEC, S-P-E-C. And he says that if you're, for founders of a business, it's all about the S, which is strategy, the P, which is people. Have you got the right people on the bus? And have you got them in the right seats? And have you got them relating to each other, working on their strengths? E, he refers to as execution. How well do you execute the strategy? And C is cash. And that's the point I'm just making, that valuation is an art, not a science, because these projections, particularly in those introduction and growth phases, you can see where I've put the arrows there, that has a massive impact on valuation. And yet it's highly uncertain. You can see here I've made 2 assumptions in the valuation of a business. If we value the business with a cost of capital of 11% and a growth rate of 5%, it's worth 1.2 billion. But if the growth rate is 3% and the risks are higher, so the cost of capital is higher at 13%, the business is only worth 760 million. It's a theoretical example. I've calculated the numbers, but just to give you just how sensitive cash flow analyses can be to both growth and risk down that left-hand side. And one of the terms that you might come across is that we could be talking about the equity value of a business, or we could be talking about the enterprise value of the business. And the enterprise value is simply the sum required to secure 100% of a company's cash flow. So it's a bit like if you buy a house with a mortgage, the house may be worth 100,000, but if you've got debt of 80,000, the equity is only worth 20,000. And this is the same with your business. The business and how you fund the business will drive its enterprise value. So if you're all funded by equity, you might have a £100,000 business that's all equity based, or you might have a combination of equity and debt. And so if you're valuing the P&L, so when we look at EBITDA, we look at enterprise value, we look at your equity valuation and your debt valuation, how much debt you have in the business, and then we look at valuing your sales ratio. Now, I would say in the most instance for private equity companies, looking at a business, they'll use EV to sales ratios or EV to EBITDA ratios. Those are the two most common ratios for a business at your stage of development, because you might not be making a lot of money because your costs are higher as you're accelerating openings, as you're accelerating expansion. And so we're looking at an EV sales ratio or an EV EBITDA ratio. And so simply the enterprise value is how much equity you have in the business and how much debt you have in the business. You add those together and divide that by the sales ratio or the EBITDA. So this is where I'm just trying to demystify some of these things that might sound a bit like black magic, as was said earlier. And I just want to share before I finish, because I'm pretty sure my time is probably done, that with EV sales ratio, in effect, how I'd like you to think about the EV sales ratio and how to think about valuation in your business from the outset, from where you are now as founders and builders and developers of businesses. What the EV sales is basically telling me as an investor is what is, what is a dollar of sales in your business valued at? So do I pay $2 for $1 of sales, or do I pay 50 cents for $1 of sales? So, i.e., am I paying twice sales for your revenues, or am I only going to pay you 50 cents in the dollar for your revenues, i.e., half? And what determines that ratio is what your operating margins are. So the higher your operating margins, the more valuable your sales, and the more rapidly growing your sales, the more valuable those sales. So roughly speaking, as a rule of thumb, is that if you had operating margins of around 10% and you were growing at around 3 to 5%, your business would be worth roughly, there'd be other factors that as an analyst I'd want to investigate, but as a rule of thumb, your business would be worth approximately 1 times sales. That's what your business would be worth. So hopefully that just gives you a really good ready reckoner for valuing your business. Conversely, let's say it's a pharmaceutical company that's got a lot of drugs that are still on patent, and it's generating operating margins of around 25 to 30%, and it's growing at 20%. Clearly, if these drugs were off patent, the margins would be a lot lower and the growth would be a lot lower. So I'm saying that these are pharmaceutical companies with very good drugs in very good therapeutic categories, with a long life patent growing rapidly, and that there's a good research pipeline at this company. In this instance, you'd expect that combination to suggest that for every dollar of sales, an investor would pay $4 for those revenues. So can you see that very sharp difference? Your margins and your growth drives your sales, your EV sales ratio. And that, I think, in where you're making your projections, is the easiest valuation technique to use. There are others. You can use a discounted cash flow analysis if you've got people who are good at spreadsheets, and I dare say you have. But just a ready reckoner with an eyeball to look at something quickly, that's what I would suggest is the ratio you think about. And that's why I've been making so much focus on margins throughout, and your pricing power and your competitive strategy, because your competitive strategy And how you deepen that competitive strategy is what protects and grows those margins, which then feeds into this valuation mechanism. And so I hope that I appreciate it's a very quick overview of valuation, but I just want to emphasize that the valuation is really a function of how good your strategy is, because your strategy will drive your margins, and your margins will drive how the business is valued. So I'm pretty confident that's probably my time up. Thank you, everybody, for your attention. I hope that was useful.
Thank you, Michael. So maybe you can just plug Michael so that he knows that you are alive. And maybe you have some questions, save it for later. Is something you really have to ask now? Go on.
So like I have a question about the airline company. You said that South Wales airline company had a great revenue and everything works great. But what does stop other companies from copying their model? Like if you say like this company is so good, like why do other companies just copy it and be good as that one?
Yes,
Thank you. Isn't it, Michael?
Thank you for the question. I think it's a really interesting point, and I think it's something that will be picked up later. So it's a thread that will run through the day, I suspect. And that's the point. If we went back to look at the quotes from Herb Kelleher, the founder of Southwest Airlines, what he's saying is that, and indeed people have copied this model in other parts of the world. Ryanair, EasyJet have copied Southwest Airlines, but certainly in the UK, people don't like traveling really with Ryanair or EasyJet. It's cheap, but they don't like traveling with them really, because the difference is, and this is what Southwest Airlines would say, I think as well, is because the barrier to entry is the culture they've created. It's the fact that the purpose is so clear. They've managed to that purpose brilliantly. They recruit. This is something that can happen in organizations. They recruit people who share their values. They don't recruit people who are good and have a capability. When I worked in finance, people would recruit the best trader, the best analyst. They wouldn't recruit people with the best values. And that's why you could argue there's so many scandals in the financial sector, is because everyone is chasing growth and they're coming from a capability, they're not coming from a value. And interestingly, around 1969-70, when Southwest Airlines was set up, they realized they were recruiting the wrong people with the wrong values. So they changed their whole recruitment philosophy to bring in people who suited their philosophy. And that whole piece here, and I think I really want to emphasize this, that the purpose of your organization, the values of the organization, and I don't mean values as being something written up on the wall of the reception. I mean the values as you live them. Values are heart-based. They live in our body. They're how we take decisions. They're how we care for people. They're how we look after people. Those values and living those values is what creates the culture. And that's what nobody has been able to copy. And that's what they're saying, is that therefore culture is an integral part of competitive advantage. A very simple point on strategy for Southwest Airlines is that their view is, in terms of clarity of purpose, it's about being low cost. We are a low cost airline. So as a result, they don't upsell at any point in the booking process. Now, I don't know if you've used EasyJet or Ryanair, but as soon as you go onto the website, you have to pay to sit next to your partner. You have to pay to board the plane early. You have to pay for a bag. You know, you're being told what car hire companies to use. Southwest Airlines, you see, that is not a low-cost model. Whereas Southwest Airlines, this is the clarity, is by saying, no, we're a low-cost airline. People use us because we're low cost, therefore we don't upsell. And so they really honor that. They're not trying to get an extra dollar out of the customer. And so it's really, and this is why I think for those of you listening, at the beginning of your business, you get a really good opportunity that organizations later in life have much more difficulty with, is almost like what Southwest Airlines did was consciously create the DNA of the organization from the outset. And that DNA is manifested, what's the founding energy you're bringing to your business? What's the purpose? What's the purpose of the founders? What are the values? And what's the culture you're looking to create? And that is huge competitive advantage. Apple, again, you may like or dislike Apple, I'm not particularly interested, but it's got a very clear culture and a very clear set of values, which people are copying design-wise, and still, if Apple launches a new product in certain parts of the world, there'll still be queues outside the store when we're beyond this COVID crisis. There'll be queues outside the door to buy the Apple version rather than somebody else's version, and that's the brand loyalty piece. And that's, it's just to hold that up as these are things you can design and look at now. Thank you.
No, it's not you that I just want to intervene here. It's very difficult to copy culture if it is authentic. And it's easier to create the authentic culture consciously now at the beginning. Then later, when you realize that it's not fitting you, obviously, culture is evolving. We'll talk about it, but it's really a problem issue. If you have a strategy that you're changing when you're a big company, you realize that your culture is not helping that strategy. It's a big effort to change it. So you're really in a unique position. If you're aware of it, it's much less energy and much bigger return for the organization to think about it now. And this is a great segue to what we will be talking, what I want to share with you, a couple of concepts just to give you, food for thought, and then we can obviously in the next meetings or one-on-one session discuss more about it. So but this is really difficult to copy, unique culture and values, but that needs to be authentic. What does it mean, hire on values? That means, if I hire you, you believe in the same thing and you value that highly. I don't need to micromanage you. I can give you all accountability. And then you give all of yourself for the success, which we share in common. If you hire only on capability, on skills, you need to put checkpoints because you know what these people are really doing. And when you do this, you're limiting space in which these people are working. So you're getting just something from them, not all they can give. And that is really why it's so practically working. Yeah? Sorry, Michael,
No, I thank you for...
This is a great segue. I don't know, do we want to make a short break or we just continue? Tell me. Michael, if you want to add something more, but I'm just conscious of time. We can go to 3 days easily. 3 of us. Just 3.
I just would reinforce this point of celebrating your uniqueness.
Yes.
Because if you start copying other people, and a lot of big companies do this, I'd give you loads of examples from my experience of this, and Warren Buffett warns about this a lot. He calls it the institutional imperative. And what he means is that big institutions tend to copy other big institutions rather than do what's right for them. And so when you're driving competitive advantage, what is unique to you is precisely what your competitors can't copy. And so you need to deepen that uniqueness. You need to communicate it. You need to believe in it. And you need to say, what makes me really furious in the UK is that people get paid by growing EBITDA, whereas I think they should be paid on what's made you more unique in the last 12 months. What's made your business proposition even better, even richer, and even more competitive? That's what I would want to capture in rewarding executives and bonuses, is what have you done in the last year that makes you more unique as an organization? And that's a much more challenging thing than growing your profit.
Can you just give me an example, for instance, for us, where we try to develop AI for the pharmaceutical companies, biotech companies, and the thing we can measure is how accurate our AI models are. But what is another thing that we can add to this? Like, not just follow, like, okay, our models have higher accuracy, which is like a technical stuff. But what about the other stuff we can?
Okay, I'll suggest if you can hold these questions, because Mihaela has something to say, and
Yeah, this
me
is
as well.
this is a
And we
great
will touch
question.
some things that make your question more fruitful at the end. So if you can hold it until now, okay. Do you need a short break? Just to no? No? Okay.
Okay, then.
Okay.
Then let me try to share PowerPoint. Michael, guys online, do you see the slide?
Yes, thank you.
Okay, super. So we already started talking about culture, and that's something that is intangible but has a huge value and huge impact to your organization. And you are already building your company structures. You're already working in a small teams, and that is creating a venue to establish a certain values, certain culture that you're living in. And as company will be evolving, you need to be conscious how you evolve this culture. What's really that you're having there. Yeah. Just quick before I start, just quick intro about myself. I just recently, like 6-7 months ago, decided to start my independent consulting coaching career. Before that, I spent lots of years, 18 years at IBM. I worked in sales, I worked in management consulting, and then last 6 years at IBM, it was HR director role, and then I did a couple of other HR director roles. In one scale-up, Oradian, here in Zagreb, scaling in Asia and Africa, and in some other industries, Atlantic Group, Croatian Telecom. My education, I'm an electrical engineer, and I somehow find myself having a career in HR. Just to know who you are talking, who is talking to you. And today I just want to introduce you the concept of what is really culture and how we can describe the culture and why is that important. And I'll share with you a couple of things quickly, probably too quickly, but just to give you some basis for conversation later on, and hopefully for our next mentoring or coaching sessions, meetings with you individually or with your teams. So what is really culture? This is from dictionary like definition. Beliefs, customs, arts of particular society, group, place, or time. Particular society owns its beliefs, ways of lives that we somehow call culture. In a business, we couldn't describe it as a way of thinking, behaving, or working that exists in a certain place or a certain organization. So how to translate it really? What would you say? What is company culture? Everyday A and B of each member of a team in pursuit of our own company C. What would you say is A? Based on this definition. It's something that each of us be part of the team of the organization are using to get to certain results. So every of these A fits the sentence. Assumptions, beliefs, values, core values, something intangible, but we somehow know this is the way how we should, we assume this is the way how we survive doing it here. And that's really assumptions and beliefs are motivating or causing certain actions and behaviors of us that we use to achieve a certain goals or mission of our company, or this big carry goal that we put in front of ourselves. And it's interesting, when you come to a new organization, probably some of you had this experience, you somehow know how things are working here. It's not about processes, policies, or written, it's unwritten, it's told. It's really how these sort of teams, these companies survived before, and that's probably the best way how we should keep it doing in the future. And we get that immediately when we come into the organization. So it's really coming, that Mahatma Gandhi said this nicely, your beliefs becomes your thoughts, thoughts becomes your words, words become actions, actions habits, habits creates values, and values becomes your destiny. You can translate this to the business. Now we need to, it's pretty untouchable. I'll show you a couple of things how we can make a sense of what is our culture, become conscious of it, and manage it appropriately. We all have influence to the culture in which we are living. Why does it matter? So, there are some hard numbers. There is a lot of research done on and proving that the key differentiator of a highly successful business is a specific positive culture they've created. This is just one of the charts I found yesterday, and which says that Fortune 100 best companies to work for have like double value in a stock market performance. They're generating double value comparing to other excellent companies in the market. And then the research really goes deeper, why is that? And it's really about their first principles, like what is the, all what's first principles, you're pretty fresh from school, I think you will remember this, the postulates, the something that cannot be questioned, on which we are basing everything, they have it very strongly established and they're living it, yeah? And they're all aligned, it's clear to everybody what they're trying to do and why. They have this stability, although the environment is changing, they're changing business models, they might change the next strategy for next 5 years, but there is something in common, their purpose, their value, their vision stays stable. They're not changing it. A highly trustful environment that retains people, and which is really what these companies are. But really, why is that happening? Why these companies are performing? Why they're achieving results? Let me try to picture it. So when you have some vision, you establish your companies. You already have vision. You define your certain goals, and then you manage. You're trying to match results against these goals. This is just the top. What really creates these results is certain actions you take. Yeah? But these actions are based on decisions which are really based on your beliefs, as we said before. And these beliefs are created by certain experiences you have in that organization. So what we experience, what we know, how we feel here, creates our beliefs, and then we go to certain actions that generate results. So this top of the pyramid, it's really structure of an organization. Who had experience working in a big companies and big organizations, there are lots of processes, management rules, reporting rules, and policies that are defining the structure of the organization. And it's really managing the obvious, the actions and results we want to achieve. But what is below here is really something that is described by culture of the organization. And culture of the organization is grown or nurtured with behaviors, rituals, habits, and stories that we live in our organization. And that is really what creates this experience and what is kind of root of everything we in the end do and achieve as a result. So what most of the, who really lived in a big organizations, what managers are doing? They're managing actions. What's action plan? What's next week plan? Where are these results? This KPI, we are not growing. It's not double digit. It's blah, 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 blah. And it's spending a lot of time there on actions. And sometimes, we adjust processes, we redefine roles and responsibilities to make it easier or better, we believe. And it's evolving every year, if not quarter. But really what's leading is creating, designing these experiences, which is much bigger base, much bigger impact, touching all of us, than only this visible on top actions. Who knows which actions we would do if we have right experiences here and beliefs. We even cannot think of that. No, there is no clever manager that can replace thoughts and creativity and capability of 100 people in the organization. Yeah? And if we only focus on actions, it's really like what's seen, what we can strengthen there. So this is really the paradigm shift we need to make. Instead of spending time in managing structure, we're spending time as leaders, as founders of the organizations in creating experience, rituals, behaviors, stories that gives people a purpose and values how they do here. And I'm not saying that the execution and structure is not important, managing the result is not important, but result is result of something. Yeah, you should manage that something. That is the role of a leader. Why is that? Okay, so you could say, okay, Southwest Airlines, Apple, they have a great success. I'll copy their structure. I'll copy their structure, I'll copy their processes, I'll learn everything. They even give a study tours. You can go book and talk to their executives. They tell you what they do differently and why they're successful. But even if you manage, it will probably not be totally authentic, people will notice that. But even if you manage that, the world around us is changing a lot, and you will be changing a lot in your growth. And every change means you need to change the structure, and that's painful and really difficult, costly process. You cannot do that, and you don't, and you realize that you need to change something in structure because something gets off. And then while you're changing, it's really difficult, expensive on time, on money, on skills, and then to implement this change, the thing already changed. So it's a constant change. And for you, you probably, do you know this chart, crossing a chasm, get removed? So if you think about the life cycle of a product or a company, let's say if you're now one product company, you have this, this is a number of your customers, consumers of your product that is growing. Yeah? And in the beginning, you have innovators that like your product, share your idea, they want to try something new, and you get them as a customer. So it's a very small portion of, but very important portion of the market. Then you start growing with early adopters, and then you get to this early majority. Everybody has it, everybody wants it. And then you get competitors in the game, and you somehow, you start to lose some of your market share or the value captured on the market. With the late majority of laggards, they're thinking about cost efficiency, so maybe they will not buy Apple's phone, but the one that is closest looking to it, and so on. Yeah? So this is really what's important. There is a chasm there, which is really what got you to get to early adopters. When you scale, you have to change something to be able to capture majority of the market. So even if you have a great business strategy, your great product market fit, and you don't need to change anything, just by the fact of growing your presence in the market, you will need to change a lot in your organization. So really, I mean, just the concept of you're first selling to make the product. You're selling your idea, people say, yeah, that's right, and then you're trying to finish the product to fit that promise. But later on, when you start to capture the biggest market share, you need to get efficient. You need to make the product that keeps the promised quality and speed consistently on the market. Completely two different thinking styles, behaviors, and value drivers in a way. First, you need to have a vision, potential. You need to see this big picture. You need to see this big, brave world. But you need the fast feedback from the market to adjust to see, where you are. Later on, you need to stick to quality, performance, and speed. Completely different organization. Completely different things you focus in executing your business. So, how to make it successful? That's the question. How to, who does it? Yeah, just a quick concept. It's not only your company. Think about, you do this with your first product. As soon as you get to early majority, you probably want to have the new product that is in idea and explore stage. So you don't wait for your first product or main product to go that deflation on the market, but you start growing the next curve on top, the new on top. So your business is constantly growing. So that means that in the same organization, you have to have people focused totally on quality, speed, and performance. That means quarter by quarter measures, or even week by week, or month by month. At the same time, you want to grow the team that is able to innovate, to challenge, to bring something new in the market, which means, having a great visions and experiment and fail and try again. And that needs to happen at the same time in the same organization. And the product maturity, it was before said, 10, 20 years. Now it's in average 7 to 10 years that the product goes through this curve. I would say in what we are doing here, it's even faster. So this work is done by your people, you and your people. And if you really want to have an organization that is flexible and fast and can do all that complexity properly, not following the rules, rule book, processes, and policies, because that slows down team. Again, it's very expensive to keep up to date and to keep at the right quality level. You need to create an environment where people will feel that they can be flexible and adaptive, and they can be full of the, they can offer full of their potential in everyday work. It's not process, it's not a quality system, it's not, and all these tools, methodologies, from Agile, Six Sigma, whatever, it's people who live in the system. And people really are feeling, how the things are done around here. And that's the culture. The way we do things around here, I would say when nobody's looking. And, when nobody's inspecting, you just do. And it's a lot of unwritten and unspoken guidelines and assumptions and expectations and memories, collective memories. Things that worked in past, or the things that didn't work in past, don't do that again. And it's really kind of like ideology, and so in a general social belief. So the culture is interesting. Everybody mentioned it, but nobody is really aware of it fully until it's challenged, until the business has a problem, organization has a problem, or there are some companies that are doing a great attempt in trying to describe their culture, even if they're not challenged by certain unwanted events in their business. So we need to try to describe it, to make sense of it, put some words on it. And there are a couple of different models how to describe a company culture. One of them is competing values framework, which is created a long time ago for you. It was 30 plus years ago, but it's probably the most used model even nowadays. And it's empirically derived, really, based on research with the major indicators of a very effective organizations. And what it's trying to do is to describe your culture based on the two axes. One says, what's your focus? The horizontal. What's your focus? Are you focused on external, on the market, to differentiate on the market, which would be right-hand side here, or internal focus on the way how you run your business internally? What are your processes, organization, rules, etc. That is one dimension. The other dimension vertically is how much of structure do you put in your organization, in your work. Is your team work, is your organization flexible, that you give discretion to people in your organization, or you are more focused on stability and control, which would be done. So these are two different elements. And based on this, we have like four major culture types. Adhocracy, creating, do new things, which means seize the moment, innovate, try the idea, and try to make it happen on the market. Focused on external, lots of flexibility. There are no rules. Whoever has the good idea, if that is a good idea, we just go into it. Plan or collaborate. You see this in the brackets. It's a new word because everything needs to start with the same letter. So that originally it was advocacy, plan, hierarchy, and market, and now nowadays it's create, collaborate, control, and compete. So it's all C's. Plan means do things that last, which is really we are flexible, but we are focused internally. That we are all in agreement. It's not I have a great idea and now I get your whole attention. And the whole organization is there to fulfill that idea. It's, I have a great idea, do you agree with me? Let's go together and let's add to this idea together as a team to make it even better, and then we execute it. So it's internal control on us, but lots of flexibility. Then control, hierarchy, as the name says, it's really doing the right things. It's really focused. This is the way how we do things here. You do this all approvals. You need to check this. You checklist. You ask for permission, and it's very, what's the benefit of this organization is really stable and controllable environment. For example, probably I don't know, flight controls or some government agencies. You don't want them to be very, you want to, have a stability there, yeah. And then market or compete is really external focus, extremely focused on taking a market share, performing against competition, really be successful in the market, but in a very stable and controllable way. So these are four major culture types. And in each organization, you need everything of this. That's why the model is called competing values framework. For example, if you are great in doing new things, in creating, but you're lousy in making it right, executing, you will not perform well. Yeah, you can have a great ideas, but if you cannot deliver promised values to the market in controllable, sustainable, high quality way, or the quality promised way, that will not fly. So the competing are this, like think about that diagonals. Yeah. So you need to have a kind of balance between creating new things and do the things right. As well, the balance between focusing on insight. Are we all happy with family? We are all in line. what we want to do, but we forgot to think about what markets needs us to do. So you need to have like a balance between competing with others and having everybody on board in your organization. So the idea is having a balanced culture and understanding where you are and where you want to go, what you want to strengthen. And when you want to strengthen something, you define, okay, if you want to strengthen this, that means we need to do more of that and less of this. And then you can start building consciously your organization culture. So as I said, this is a model that helps you understand where you are, where you want to go, and clarity, intentionally, what you're doing when you manage people, when you manage your process, when you're building your product, when you're hiring, when you're firing, when you're promoting. So, all these big events in your team life should be thought in a light of, okay, if you want to be, collaborative, what does it mean? How we put our reward into it, how we pay people, which kind of candidates are better fitted for us. It all has impact to the everyday behaviors and decisions we make. Any questions here on the model? I mean, there are great books on this if you want to know more, or we can follow on in other session. Just to explain a little bit more about these 4 major culture types. I already talked about it. Create, do new things. It's really leader. You would see, the leader that creates this kind of environment or that fits best in this kind of environment. It's innovator, entrepreneur, visionary. And what's really valued is agility, adaptability to changes, innovative outputs, transformation, all new things, being first. And with this organizations are measuring the success with the numbers of innovations they produce, visions that is ahead of market, the pace setters. The pace setters. The vision is really be first, create the market. You're not following the market. Collaborative organizations with the major culture type, collaborative. The leader that creates or that fits best is a facilitator, mentor, team builder. Some value drivers, commitment, communication, development. It's very human, human development, growth kind of environment. And it's a lot about are you all participating? Everybody needs to have a say. Control. I believe many of us who've been in organizations usually felt this a lot, which means that you have a leader that is organizing, coordinating, making sure you do the right things. Lots of focus on efficiency, on time, timelines, consistency, quality. And it's really about creating the organization that is capable to produce a lot efficiently in a shorter period of time at a defined point. And compete is focused on market share, goals, profitability. Leaders are usually very competitive. Car driver, it's really, they're showing by example, they'll die for the next double-digit profit growth or market share take. And it's really about aggressively competing on the market, focused on customer, and making sure you are better performing than competitors. What's important to say is that culture are created by the leadership. So this chain starts is with leadership behaviors, with leadership values. And that really orientates organization in a certain way and creates some effectiveness in the organization, and then value drivers, what moves the organization. So that is how it's linked. It all comes from leaders, and I would say even from founders, even stronger. My experience recent one, I was in Croatian Telecom, and ISKON was acquired, you know ISKON. They acquired by Croatian Telecom years ago. Yeah. And I was surprised, completely two different cultures between Croatian Telecom and ISKON. And even if organizations are integrating a lot of their processes, people, directors from Croatian Telecom are running ISKON now. They completely changed their behaviors and their style of leading the organization when they came to ISKON. That is how that strong culture of ISKON, but is seeded with these founders. And it's really interesting that even this big, and ISKON comparing to Croatian Telecom is really small. And there is constant project running how we integrate ISKON to Croatian Telecom. And this
to make it more ISKON.
Yeah.
They came to ISKON to learn how to develop our culture.
And it's really interesting, you know, and you don't have founder there for what, 4, 5, 6 years, 5 years. I think he left more.
No more.
The time flies. Yeah, but you know, but somehow, you know, it's so much authentically ingrained in this team that even new leaders coming from a completely different culture adapt to this team. So it's really interesting to see. So that is really, I link it to the founders' values. And that uniqueness, the authenticity that was put in the organization right in the beginning. Okay, so it looks like a big science, but it's really easy, and I can share with you Excel file which has 24 statements that you would just choose like points for each statement that describes your culture. I know it's early now, so I didn't want to put it to that. But just to give you a little bit of practicality there, you answer to this 24 statements, how it is today, and then the same questions you apply, okay, but going forward, what would be the better fit for us, for our business strategy? And then you get this kind of chart, like on the right-hand side here. Red is how it is today, and green is how it should be to make it easier for us to achieve our strategic goals, our strategic plan, our strategy. Yeah, what would be better for us? And then you see where is the gap, and you manage the gap. And it's really important that, you know, this managing the gap comes from the top. It's much easier. You cannot expect that a big change will come grassroots when we're talking about organizational culture. I put intentionally pictured like this because in our region, most of the organizations are very high on hierarchy flavor in their culture. And most of the organization recognize that they should put more of elements of plan and advocacy or collaboration and create. And that's all about, you know, everybody's talking about business agility, adaptability, and all this. This can lead, this kind of, if you want to build agile business or adaptable business, your culture has to be more in these top quadrants, or it will just be following the new rules and not really agile and adaptable. And this is a real example I have from one client. It's a bank, obviously. So this is what we do. Now I want to show you a couple of examples from real companies. Again, Apple. Apple is a great case study for all of us thinking about organizational development and growth.
And personal development.
Personal development too, I'll come to that, yes. So here is the Apple. Culture change over time. As a result of maturing the organization and as well changes in the environment. So you see the profile one. This is Apple in the beginning of their existence. They were totally dominantly adhocracy, create something new, innovate. Yeah? As they start growing, they start to be more inclusive, more people on board. We are all together, we want to collaborate, we are growing teams. And create something new is a bit less present. What is, which element of culture is growing? It's collaboration. It's thinking about us. Now we are a bigger team, how everybody gets involved, how we are working together. What then happened is they had a huge problem in delivering the results. Yeah, they were a great company, they had great fun internally, but they could not deliver. And you probably read the books of Apple. And what happened is that they had to focus their attention on predictability and delivery, which means processes, rules, and quality. So the huge emphasis on control there. Yeah. And then eventually, that was a little bit, how to say, the control element. Instead of controlling internal practices, policies, and rules, shifted to the market. Yes, we are controlling, we want to deliver on a promise, on our business plan, on our results, but we are putting a lot of emphasis on what we are doing at the market, on the customer. Yeah. So this is the real case of Apple in 20 years, from 1980 to year 2000. And I would say this is a typically how startup companies are changing their dominant culture types. It's a life cycle. It's like, being very, a startup comes from a big innovation idea, something, and then when you start hiring, you want, stability. So every startup has a rule book. When you come here, read this is how we do things. Lots of, focus internally on team, on growing team. Maybe less on innovation. Now we need to get all these new people to help us out. Then you have a chaos, you need to put more structure, more rules, more processes. I joined startup, we are all happy family. When I come in from IBM, they ask me, please help us put some processes in place. We need processes. You're just doing a lot of things, we are not productive. We need some rules. We don't need to every day discuss all over again things. And then you go to this control, think about internal ways, how you organize, how you structure your work, and eventually you get out of that, start to focus on the market. This is the average culture plot for 1,000 organizations, different industries, different sizes. Most of them are in US and Western Europe, but there are obviously worldwide organizations from different parts of the world. And it looks like that in average, organizations are mostly focused to succeed, obviously, on the market, on the customer. There is a lot of rules and internal controls, and not so much on innovation and collaboration. And many organizational leadership consultants are making millions of dollars of consulting, how we become a bit more collaborative and creative organizations. But keep obviously good things, focusing on quality, on execution, and on our market. So that this shift, evolving organizations are going into emphasizing top two quadrants. That is recognized need. So leadership and culture are the two sides of the same coin. So if you want to evolve culture or create certain culture, it has to be authentic for the leaders, especially founders. So you need to become aware of your own style, preference, and values, and how that translates to the organization, values and ways of working. And the different kind of managerial practices are effective in a different kind of cultures, or if you want to evolve your culture in a certain of these quadrants, you need to emphasize management styles to be fit more to this, to creating these cultures. It's two-way road. So, if you want to become more collaborative, you need to have a manager as a coach. So every manager needs, have to restrain from, I'll tell you how you do things because I know the best, help you to understand what will be the best in this organization. Okay, so that is a typical change that is difficult to make for many of executives. So that's really, you know, and then the balance between looking into your competitors and trying to outperform them by doing things faster, cheaper than they are, and they take a market share. Balancing that with completely seeing it differently, you know, innovate to create a completely new market trend, and with that hurt your competitor. Yeah, so it's, you know, how you do less focus on, you know, what others are doing and more focus what we can do, what are our values. So this is the metrics we are working in. And I've seen many organizations now asking, okay, we want to become more agile, adaptive. Yeah, we want to do this, and then we do all this great stuff like agile teams and methodologies, Scrum, Kanban, blah, blah, blah. But then when leaders need to give space to teams to really take accountability, which is the essence of agility, yeah, to kind of distribute the power, they don't feel comfortable, they cannot do this. And then you're stuck, you cannot do it if they're not ready to grow, you know, and to find their purpose in this environment where they're not always asked to make decisions. It's really difficult. You know, I'm paid a lot because I have to make all these decisions. Now you're saying I have to leave team to make decisions, but what's my purpose, you know? So that is like, Gordana will probably tell you a lot about, you know, this personal growth and finding, you know, what's your role in this kind of organizations, how you get out of old habits and adapt to new. It's really crucial. Okay, we talked about this. This is just a summary of everything we talked about. So culture is different in a different life cycle of the company. Leaders reinforce the culture with the things they introduce in the organization. And if you want to change anything, you know, we now need to change because we are in a different phase of our growth, of our product maturity. You know, you can make change by forcing it, but it will not stick. So you need to create a culture where people can feel flexible and encouraged to change. My question is, my big thing I want to leave you with is culture can be illustrated, measured, somehow shown, which help us to be intentional what we are doing, because with that we can build a certain culture that fits our purpose. Yeah. Just to make it a bit more practical, here are 6 elements that are like, you know, you touch to create all this, you know, what we described culture. Yeah? First, you need to have a purpose. You know, why you exist. What's really something that you do that will make the world a better place, or that somebody wants to give you money. Yeah, it comes from there. Then your values, your beliefs, you know, how you want to do it, why you want to do it. That has to be in line with behaviors that are observed and seen every day, in every day, not only once a year in whatever event. And your recognition, you know, how you reward people, when you say thank you, when you give a bonus, how you pay people, should be aligned with all this. Rituals, communication styles, events, whatever you do, you know, in your teams, again, to be, you know, as a channel supporting all that. And some other cues. Could be a poster, could be a picture, could be a blog, whatever it's appropriate to illustrate all this. That reminds people all the time, you know, what's important here. So probably what you could, you know, maybe in the next 48 hours, they said, you know, after you hear something new, if you don't do anything with that in the next 48 hours, you'll probably not do it at all. So maybe you go to this slide and ask yourself, you know, what's my values? And these are some questions that helps you to define what's your core values. Core values would be values, there might be 10, 20, 30 of them, but what's core? What's like basic principle, what's really that it's the most important when, shit hits the fan, let's put it this way, And, with these questions, you could find, what's your values, and probably that's values of your organization, of your teams you will be building around your idea. And then think, is it credible? Is it uniquely tied to your mission? We're talking here about team that is to accomplish certain mission. And if you have both checked, that's probably something you keep as a core value that gives you this uniqueness, and that gives you this, why we are doing it like this and why we do exist. It could be something like this: honesty, integrity, service, teamwork, and that's great. And this is, I think, all of us would subscribe to these values to live in these organizations. But what would be unique is that then it doesn't only say teamwork, but you incorporate this teamwork in your mission, in your values, in how you make decisions, in how you communicate. So it needs to live. It's not just this word, and we put it there. Yeah, it needs to live. I'll tell you a little story about Arabian. I joined them after big, US corporate cultures, and they said we have these core values. These are our core values, and okay, what we care, we cut the bullshit, and we make it happen. That are our core values. Huh? I was a little bit nervous with this bullshit. Can we call it differently? No. I said, okay, what does it mean? Yeah, because for me, it was totally startup-ish bullshit, that word, to be honest. I was like explaining what does it mean. And they said, yeah, we are really straightforward in our language. We use the simple English when we communicate. The fonts we choose in our documents, in our PowerPoint slide, the way how we communicate between ourselves, the way how we communicate with our clients. Our contract is on one page, there are no small letters, everything is up there straight. I said, great, I like it. Okay, we call it cut the bullshit or whatever. Yeah. And then I had developers, software developers. I had a team of 50 experienced software developers. They were all 10 to 15 years of experience, meaning they're all prima donnas. Yeah? And they don't have time to train new inexperienced developers. We need to be highly efficient. We only hire experienced developers that are highly productive. Okay, great. And they're sometimes very rude to each other. And then when I said, why you're rude? They said, no, we are cut the bullshit. Just say what we think. And that was a bullshit, and these guys, this is a mistake. This was a crazy decision, blah, blah, blah. And I said, but where is we care in that? Because when you tell it this way, the only way the other person can react is with being defensive or fight back. So yes, tell it without a lot sugarcoating, but in a way that somebody can accept it and do something. You care for this person. Oh yeah, really? And then the argument stopped. But you see, so you need to, make it living and remind people all the time, why something is acceptable and something is not acceptable. And I think, okay, I wanted to share this with you because it is a little bit of what Michael said, what I'm saying, and what Olga will say. You probably, who read the book Lean Startup? Yeah, I mean, it's a Bible in corporate America and probably US as well. All big corporations, multinationals want to be a lean startup. Yeah, so building a lean, agile organization. Agile, please don't confuse it with Scrum here. It means adaptable to change, to change in environment, to change inside or external change. So building this kind of organization, what does it really mean? And lean means focused on value. Focused on value. Value to your customer, to somebody who wants to give you money for something you do for them. Yeah? So that is lean. Focused on value. Change how you create value. And agile means adapt to changes quickly, easily. Not another big change management project, but you just do it, you just adapt. Yeah? How to do this? First, everything starts with clarity on your business value, what you must produce, what's your purpose. And then clearly communicate it to your people. Sometimes it does exist. I read great business plans and nobody in the organization knows what is a business plan because it's confidential. Sometimes it's confidential. Yes, sometimes. So it's clarity, you know, why we do exist, what's the business value we are producing for the market, for whom, and everybody understands that. So that is really business strategy, what you want to do. And two key questions. What's the purpose of your organization and what's the value your organization brings? Then lean is really focusing on efficient flow of value, understanding end-to-end how you create this value and taking all the things that are not really creating value out of that chain. So that's really lean, thinking about lean, you know, waste, taking the waste always out, understanding end-to-end how do you produce value. But that is operational strategy. That's how we do things. So this is what we want to keep. This is how we do it. And be obsessed with that every step brings in the value, or whatever, every part of the chain brings value, whatever is considered as a value is not bringing the value, find a way to take it out. What are the fundamental principles of achieving this efficient flow of value? Are these four. Visualization, again, clarity of everybody, what we are doing and how that is linked to the value we want to produce, to our business strategy. Like visualize, make sure that it's complete. Make sure you as the leaders, you as the founders would need to make sure that this, we call it red line between our business purpose and strategy and my role here is clear. Yeah. So Mihaela will join us. She will do this because this is how that contributes to our overall strategy. And that's the role of a leader. And you can use other, you know, things how to communicate this clearly, but that's really the leadership, you know, with this clarity. Empowered teams, that's the tricky. Empowerment means that somebody is ready to take accountability because accountability cannot be given. But you need to create this environment that teams feels empowered. So that's a tricky one. There is lots in this empowered teams. Continuous learning, and that doesn't stop on your teams or your whatever people, but it means for you to continuously observe yourself and be ready to change things in a way you're doing, you know, you're doing your job. And short feedback loops. Like this was great, this was a bit less great, and continuous inspection, you know, in a short, not a year over year, maybe in week by week or every 2 weeks. So these are the four let's say, principles or tactics to enable this flow of value efficiently working in your organization. And then all this is enabled, these four principles are enabled with these things we call Agile methodology, Kanban, Scrum, Six Sigma, value stream mapping, design thinking. These are techniques that you use to make this environment living in your everyday today. So when you, that's really how much, you know, so where to put things. And these four elements here are as well key ingredients in creating a certain culture. Doing less of behind the doors things creates more collaborative culture. Doing more feedback loops creates more innovation. You know, doing more learning again creates more innovation. Empowered teams, adaptability. So, you know, as you tune into these 4 fundamental principles to make your value building process lean, you will be creating a certain culture. And that's it I have for you, I think, today. So that's important. You know, you don't want to think about your teams as a machine with input, outputs, and that's it. You really want to build the organization like a garden, keeping everybody, you know, blooming in it. And to make that, you need to have this cultural coherence. Cultural coherence means our culture, our communication, our decision making, our rewarding, our leadership styles are aligned. And then let's create a high performing organization. That's it for the intro, but I hope you will have a question so we could then unpack some of these concepts.
Any questions?
Any questions?
You know,
like a
needs to
question?
be asked now, or you can hold for later.
Online, guys, we didn't forget if you are there. Okay.
Okay. Do you need a break?
Yes.
Yes. Okay. So 5 minutes. Okay. Guys online, we have 5-minute break. So if you need something. Okay. Let's hope we can start. Thank you for being so patient, not asking questions, listened silently, and I'll try to cover all important information in 10 minutes so that you can go on your meeting. And for those who are staying, there will be more than that in 10 minutes. And all that are not in for longer time, we can cover everything in Q&A section afterwards. And obviously, we will have a recording because Mihaela was smart enough to include it. Yeah. Okay, so what I want to share with you is everything will function. Okay. So few hints for the start. What I want to show somehow to you, why the founder and leader, so it's maybe you are founder, maybe you are leader, maybe you are both, are really key elements influencing business development and growth. And I'll link it to what Michael said to you, like competitive advantage and how will you be someone will evaluate your business is also very connected to your personal values. So we'll cover that one. And then everything you do, everything you will try to perform, and new results, new area, new endeavors, new teams, new challenges will ask from you to change as well, to grow with your business. And that's actually the key point I want. If you want to succeed, grow with your business. And grow, I don't mean you have to put more food in you or grow in a physical way, but you have to grow your mindset. And you will see it's not always easy task. Actually, what you may or may not know, that we actually have something, and you have a great book. It's not a small one, and it's from really great Harvard Business School authors. That's called Immunity to Change. So we all have that. And how big it is, it's actually done, people make a survey. How often would people who are really ill, meaning having some heart troubles, stay consistent to their pills and every procedure they need to take to stay not healthy but good condition? And they found out that just 1 of 7 will stay with all procedures in 1 year. So even when we are, when our life is threatened, we are hardly to change our, behaviors and thoughts and what we do. So we'll talk a little bit about this and how to make difference and what are technical challenges and adaptive challenges. So and at the end, I'll show you the model of neurological levels that has been used by Mihaela and Michael as well, but now you see the form and just share what each of us will tell you, but you will see that that's the model that's supposed to help you to be more aware and more conscious about things you are doing and how it's connected with you as a person. And that will influence your business a lot. So I don't know what are your feelings about things you have heard from Michael and Mihaela. And I'm only one with not calling Michael Mihaela, I'm Goga. So kind of that's my competitive advantage, in this. And I'm assuming, so we are all assuming you are kind of in the early stage, at least with all projects you are doing in Bird Incubator. So I know it's not early stage for Diana's organization, and I don't know for others, but in this project you are in early stage. So hopefully it will help Diana and her team in other areas too. But when you are in early stage with something, you may have feeling that, those guys are talking about, evaluation, culture, and we are still just trying to make a product that's decent, that's valuable. We have a great idea, so don't bother with us with that. And that's the most common mistake people are making by entering business and try to succeed in something. So that's why 3 of us came together and we were talking, so because we are overlapping some things that we want to show you, to make aware, make you aware, make you conscious. These things matters from the first day on. And if you are more conscious of it, it doesn't mean that you have to build everything we are talking about now, but you have to be conscious all along the process. These things influencing your business a lot. Actually, I want a quick reference how I met Michael. So we were both assistant trainers to our trainer and our great teacher, John Oliver. And we met in Holland, and being assistant to John Oliver. And when in the first contact, so I'm asking Michael, so what do you do? And obviously I read his CV, so I knew kind of his big guy with financial background, so everything different than me. And he said something like this. I don't know exact words. I'm trying to find, so I'm researching how values are important for business. And I said, oh yeah, sure. You know, evaluating values. And he said, no, you don't understand. It's very interesting to me how personal values of you, if you are investing, are influencing how much profit will you gain with your investments. And I said, oh, that's what, you know, I want to hear more about this. So that's how our friendship started in like 4 or 5 years ago. So, and being in consultancy and education for now almost 20 years, I've seen too many times, too many times, people struggling with something that's actually, if you're just making this more conscious, you can, you know, live more easily and more successful business life. So that's my aim here to make a point of this. Why? Because at the end, there will always be a person. And I know it may sound strange because you are working on AI projects, so artificial intelligence, and some say in the somehow near future we won't be Homo sapiens, we will be something, keyboards or whatever. And there will be products that we don't have to care so much about people and teams. And it may be true. And it's a little bit frightening for me because I'm 54 and it's very strange world for me. How much I try not to be, but you know, if you try to imagine you won't be needed in this world, it's somehow frightening. But with all those products, all those applications, all these AI projects around us that are really great, I admire technology. But there will be always a person using this. If not, then it's all useless because I can, and maybe I'm wrong, but I cannot imagine somehow, you know, robot or machine caring about products and marketing and, you know, why would computer need other computer? I don't know, maybe I'm wrong, maybe it's completely unimaginable world, but at this point, at the end, there will always be a person, be it leader, founder, be it someone who is working in your team or your customer. And even if your customer are organizational, an organization where people can make the strangest things you can imagine. So I want to tell, if you count just on logic, change immediately. So in this part, so Michael told you a little bit about companies and how company gain value and how it will be evaluated, and then Mihaela told you how culture and teams play a big role in this. Hello, thank you for silence. And at the end, there is a leader, and Mihaela told you a few things. The leader has to be aware and has to change his business. And when you come to different team can change you. And if team has greater culture than you as leader is a good thing, but sometimes teams can change leader to worse, not to better. So, you know, it's obviously good that you are aware of this. And as I said, have a growth mind, and growth not in the way Michael and Mihaela say, don't focus on growth of your company, focus on growth yourself. Because if you are growing with your business will grow as a result. And that's for sure. I can guarantee this, and it's not an easy thing. And as one saying that's straight to the point, is the single biggest failure of leadership is to treat adaptive challenges like technical problems. What does this mean? So first, see different about this, and this is inside some computer or whatever. I just one picture. And we can say it's very complicated. What does it mean? It's a long things connected to each other, but complicated means we can trace it. So at the end, if we just know how it works, we will find failure, we will find how to fix it, and we know if we put something here, how it will be end. That's complicated things.
Expert domain. Experts knows how complicated systems are working, but it's pretty much technical. Yeah?
It's technical. So if you know enough about technology, you will solve any problem with this. But we have systems like this, we cannot call complicated because we are one system. They are not complicated. Okay, it's much simpler than the first one, but this system is complex. What does it mean? It has many entry points. It has a lot of things you cannot predict. You cannot predict how each of those people will come and what mood will they be in. Who hate each other and who love each other. Whom you say something nice and it's a good thing, and the other will say don't bullshit with me. And every other stuff, and we are not still, it's just, how we talk and communicate. And when we come to business, then who know better, who is in charge, who will take responsibility, who will not. So it's a lot of think of, and we cannot control every single entry point. That's what system makes complex. So just be aware, your business and product you're making will probably be complicated. But teams and customers and you as leaders, that we are talking about complexity. I don't just please understand this. And it's something how you can grow, and what I will really encourage you to learn. And Mihaela said you have to be a constant learner. You have to learn. And many learning programs, and you have now a lot of online education that are, video types. You have structure, you look at it, you can, run it on your time and at your pace. You can go through each lessons like many times. So you can very easily learn new skills, new knowledge. And the question is, why so many people first don't use it? And even if they use it and learn, don't incorporate it in their daily activities in a big scale. And why is that? Because we know that today for success, we require something that's horizontal, that's we have to learn skills, knowledge, acquire knowledge, because everything's changing about us and around us, and we have to learn new things. So new complicated stuff we have to learn. But we also need something that's vertical development, vertical growth. That's how we actually succeed in implementing new knowledge. How we use new knowledge in a new way, and it's easy for us. So how we can overcome our ability to change? What does it mean? So Mihaela said we need a fast feedback loop, and I couldn't agree more. And I don't know, maybe for those of you who were in other organizations and still in this, there is a constant need, and whenever you do some exploration about culture and what people need, the feedback, more feedback will be on the top position, if not one, at least one third. So people want more feedback. And there is a lot of workshops, education you can acquire, how to give a quality feedback. And it's not, you know, the most complicated thing. It's actually very easy. Very easy. So you have to be with person, see person as he or she is, and then say you're rated this, your part is very fast, and this you should do differently or you can improve. No biggie. But when you ask leaders how often they give feedback to their people, it's once a year, and if you tell them they should do more frequently, it's, oh, you mean twice or 3 times a year? No, I mean twice or 3 times in a week, or in 2 weeks, or at least in 1 month. Why? Because things are changing so fast that giving feedback once a year means nothing. You better don't give it, because that's bullshit. If I make a mistake in January and you gave me feedback in December, what I will do with this feedback? And I know that it's not so bad, but it's not much better either. Okay. So why don't leaders give feedback if simply they know how to do? Because it's uncomfortable. So people don't stop development because they're not mentally acquiring new skills. It's easy. I mean, not always easy, but you know, in a few days, in a few months, you will learn. But implementing this in new process that you have to do, that you have to talk with your team in a different way, that hurts. That's, so what they will think of me. If I have to do it differently than last year, would they think that last year I was not competent? Or why I'm changing now? Or why I'm asking them to change? Will they call me inconsistent? And everything that's going on, every assumption, every belief we have, it's stopping us. That's our immunity to change. That's adaptive challenge. So it's not that we don't know how to. It's we know how to, and it's still hard. And it will be hard for you because as your business is growing, you will have to change. If you are not, you will stop at some point and your business won't be able to go further because I don't mean every one of you personally, because not each of you are in the same position, but if you are a leader, your team cannot succeed if you cannot change. So we want to have agile teams. And I will agree with Mihaela. You cannot have agile team if you don't have a leader who is prepared to change himself or herself. Because it creates. And it's very valuable and it's very worthy. So if you make this step, you will have a lot bigger success and much more satisfaction. So just a little bit what our brain have to do with this. You probably know that we have left brain and right brain. And you have heard probably of differences. So I won't stay on this very long, but left brain is our logical, analytical, cause effect. So if you do this, it happens with this. It's a side of words and computation and facts and language. And we usually admire this one. We feel smart because of this one. And we try to control the other part because of this. But right brain is where our creativity lies. It's holistic thinking, it's intuition. It sees what's emerging from the future. So it's creative, it's visualizing. So everything we need will be agile and be more on the development side. It's actually on the right, in right brain. And what's most interesting thing, our left brain, because it's so smart, it's so logical, thinks and wants to make it all along. So what does it mean? With left brain, we try to exclude the right brain. So it's not just go along to myself, but just logic, just don't take it personally. Have you ever heard this in business? It's nothing personal, okay? It's just how business is done. So, yeah. Well, right brain knows it needs left side. And it's common saying, right brain sees but cannot talk. Left one, he cannot see but talks. And it's actually that we put all of our brain together. So whole brain thinking. That means we are seeing and we actually can speak and can talk and can share with others. So just keep in mind in everything that was said with Mihaela and Michael, how your competitive advantage is linked with what you differ from others. It's basically your identity. Who are you? Not just you as a founder, but you as a company. And it's all this combination of ego and soul, of mind and feelings. And it says charisma, passion, and presence emerge naturally when these two forces are aligned. So that's kind of nice reminder for you. Don't take your feelings away. Put your passion in, because that's what will bring you energy and motivation to overcome everything on your path. When you fail, and when you will be fail. And if you can't, you are not change that thought immediately, because without failing, you cannot succeed. If you are not failing, you are aiming way too low. You're putting your goals too small, because you don't know what you can achieve if you are not pushing the boundary of failing. So when you fail, it's a good thing. If you learn, if you just put the dust of yourself and then look to get on your feet quick. And in very uncertain times we are living in, so when everything around us is constantly changing, knowing who you are, it's very competitive and will stabilize your business, stabilize culture. And if you don't know who you are, what's your values will come to this part, then you will lean, you know, so you're floating everywhere and just hearing what others have to say. And in neurological levels is the model that was developed by Robert Dills. It's one of the very famous NLP guys. And I don't know if you have heard about NLP, neuro-linguistic programming. If not, that's some other workshop, but just so you know. And it's actually how our experience is structured, how we can see it on bit levels and then see where the problem is or where the challenge is, however you want to put, and how to solve it. And there is a very famous quote from Albert Einstein: the problems of today can only be solved at higher level than that which created them. So we cannot solve the problems at the same level they will create. Yeah. So what are neurological levels? First, we are all living in some environment. Your working environment, that's where you are, what's around you. That's places, but also people who are around you. So this level answers the question where we are doing business and where here or you know, it's just context we are in and it's influencing us. So do we have to, it's our customers, it's our investors, so everything that's outside us can be put in this environment and it's influencing us. And then the second level is our behavior. So in that environment, with all that input, what do we do? How do we behave? What are our actions? So that's answering the question, what do we do? What are our daily activities? What do we do to make business done? What do we do to make ourselves a better person? Whatever. So our actions. And then the next one are our capabilities and skills, our knowledge. This level answers the question how we do it. How we will do business, it's strongly dependent on knowledge we have, other skills we have, our, you know, what we know, what we are capable of. So this answers our question, how. And this is what in Mihaela presentation you saw. It was upside down pyramid. So in Mihaela's pyramid, that was results and behaviors, if you remember. So those are things we are managing. Managing means we are trying to, you know, control it, whatever. And there is a line, and this line is boundary because now we are entering levels that are highly unconscious. What does it mean? If I'm walking now, so I can be easily aware of that, and you can easily see it. So it's obvious, it's conscious. I'm walking, or whatever I'm doing. And if I know something, I usually know that I know. So if you ask me, can you do this? I'll easily say yes or no. So it's really much more easier to be aware of these things, and we don't have to put any other effort. But next level are our values and beliefs. And what makes this level unconscious? our values, meaning things that are important to us. So values answer the question, what's important to me? Or why I'm doing something, or why I'm not doing something. And beliefs are things that are more connecting values with our behavior. Is because let's say if my very high level, value is freedom. So how I live my freedom will very much dependent on what beliefs about freedom I have. And I will always make a case, it's my very high value, freedom. And there is one country in the world that has really, really high value and freedom, you know. What?
America.
No.
America, United States. So, okay, they have, you know, liberty statue, and in every endeavor and every action they will call upon freedom. But how we live, so I know it's not plain comparison, but for me freedom is that I can live by myself, not hurting others and not trying others to you know, make something for me if that's hurting their freedom. America is better than me because they so strongly believe in freedom that they are, you know, giving freedom to others. You know? Yeah, but you know, when they are, you know, flying all over the globe and do something even with their military force, they are saying, and you can hear this, we are giving them freedom. We are, you know, bringing them freedom. We are here because they are not free. So it's very, I don't see freedom like this. So beliefs are how we live our lives, basically. But both of them, values and beliefs, they are answering question why we do it, why we don't do it. But they influence our behavior, even if we are not aware of our values. And that's very important for you to know regarding your businesses. So there are a lot of companies that have, you know, written values. And I don't know if you have ever felt that you are entering some company and maybe you see their values. And then in first contact with whatever people in this company, you look at this and you look at people and you're kind of having, you know, strange feeling it's something wrong. Why? Because values are not operating if we put them on paper on the wall. They're operating unconsciously in whatever we do. So we can see our values, even if we are not aware of them, and even beliefs. And at this point, I want to invite you to make aware, be conscious, make it conscious, what you really value, why are you doing this, whatever. Why are you in this business? And these have very much connection to your competitive advantage, because your values cannot be copied. And it's very influencing culture, and it's very influencing how investors will see. And I assume Michael will add something to this later. So even higher level is our identity. That's answer to the question who we are. And we saw in the slide before, our identity is all of us. So it's our values, beliefs, capabilities, skills, behaviors, and even more. So that's who we are, what we are saying, about ourselves. And there is very often confusion in neurological levels, and it makes confusion in what we do and how we behave, because you can, let's say here, you can ask people, what can you do? So what are your skills? And people say, oh, I'm an engineer. And that's the question on this answer on this one. I am is always on identity level. I identify that's me, and not my skills. So skills are part of identity, but not all. So knowing who you are, what you stand for, it's very crucial for you as a person and for your business. And then above all this, it's purpose. It's actually who else? How we connect with something bigger than ourselves. It's even so who else is in this? And you may see that environment, like we started its lowest level and purpose, and that's actually level of spirituality. So it's, you know, something bigger than us, but it's also including something outside us. And you can easily, you know, link this, because very often purpose of the company will have something to do with the environment we are working. So how we are, you know, giving some value to the, you know, outside world. Why is this important? And having clear purpose. Why are you, what's for you as a person in your company, in your product, and whatever you aim to achieve. Knowing your purpose is always what does this give others? And who are those others? We can talk about this, but it's not just me. And I'm emphasizing this because I've seen some, and not people that are not here, not included, because you guys haven't done any personal work yet. But sometimes in early stages, startups, you have an idea about product, service, whatever, and you're so focused, make it product, that you forget what's the purpose. Why have you started this product, not any other? And what's the purpose of it for the outer world? And how you will contribute to outer world with your product, with your service. And that's where also competitive advantage lies. So this model can help you. So if you're going, if you ask yourself, and you can go upside down as well, and you can walk, you know, any level you want. But you can ask yourself in the bigger picture. So what's the bigger picture you will define? I or we? So who am I or who are we? Can or can't? Can or can't is, do we believe? And is it valuable? Okay, so it's not if we really can do this, but believe that we can. And when you are making some product, it's future product, so you have to first believe in it, then you can make it. And with these capabilities, so with all knowledge, skills, capabilities we have, do this here. So if you're working this side, so it's obviously more general question, but you can put your stuff in it. You can see where maybe you are stuck, or you have to some, you know, questions more to ask to make it clear. Because when you align along these neurological levels with yourself, and it's also for your business, because this is a scalable model. You can use it for your personal development, for your team development, your organization, country development. We can easily analyze our country through this and we'll see that we don't have alignment. So we are like, but because when one level is not aligned with others, it really feels like, some part of you is kind of aside, and it's hard, it hurts. So being conscious about these things create alignment along levels. So you can consciously do this. And for the top levels, so beliefs, values, identity, purpose, that's the things leadership is responsible. For the lower levels, it's management. And you have to do both. And Mihaela showed you how you have to transfer from a more on the just managerial side to more leadership, because we want to have people who are who have autonomy, who are accountable, who are engaged to let more work done. And people's behaviors are external manifestation of other levels. That's what I want to say with this. We have beliefs, we have values, and it's influencing us. Either way, are you aware of it or not? So make it conscious. And that's one great thing about purpose. Say one cannot lead a life that's truly excellent without feeling that one belongs to something greater and more permanent in itself. So purpose is always connected to something with why we are doing this. Who will else may have some value of it. So so we all will share those slides with you. I will just walk through this, but don't want to say most of it when we are in layers. It's just that you know that you have more detailed description. But I want to see this. Great companies have great causes. I would take example of one course as a company. Is it a company?
It's a brand.
It's a brand, okay. But it's very clear purpose to make workspace more family oriented or more supportive for parents and family life. So and for me, I don't know, maybe you have a different feeling about this, but I have feeling it's very clear, and it's enabling something that's maybe hard to do in the environment we are living in, but very successful. So I personally have pictured that you are very successful with this. Purpose gives meaning, unleashes productivity, passion, and creativity. So when we are talking about highly performing things, if people have sense about purpose we are trying to achieve, they will be more productive. So, and at this point, when you usually like two of us, or you have like up to 5 people in the team, it's not so obvious, because usually you gather around some purpose. When you are scaling your business, how you communicate purpose, values, and everything that's culture made of to newcomers, that's often very tricky point. Because we forgot. It's not because we are, not well-meaning people, or we are like we don't want to share. We want to share, but we think it's obvious to others as it was for us in the beginning. So we forgot. And then we are very surprised how these new people, newcomers,
Wrong people. Give me the people. Some wrong people. This is what, please never.
There
say
is
this.
no people like us anymore in the world. You can hear this very often. Maybe and maybe not. And it's not that we don't have like, you know, different ages, different styles, but usually it's how we communicate and how we select. So are we selecting people not just by purpose, but also by identity? Who are they and who are we, and how is, you know, making connection, and more more important about values and beliefs. So those are things that you want to be shared across the teams. And what differs when you have values printed on fancy, you know, posters and walls, and you may have all things, and living them is how we respond to values being violated. In my experience, it's not that the companies are not doing effort to make values seen or even promoted, but very often they are not doing anything against behaviors that violated values. So let's say our value is really giving feedback and achieving feedback, and we have a manager or leader that haven't done feedback with their team for like 6 months. So how we treat that leader? Is there any, you know, sanctions or anything?
I just recently read a book where one manager said that example. He said that he called the manager of the manager to talk with him, and afterwards he actually fired both of them.
Yeah. So that's when we want to promote feedback as a very high value in our system. We won't tolerate it, not being done or not giving people feedback. So, and it's just one example. So ask yourself, if something is very valuable, you want to have this value. What are you or people around you in your team doing when this is not the case? Are we tolerating silently and then talking around water coolers and finding excuse? He didn't mean it. He's a great guy, but or something like that. Or we face it and do something with it, because your people, and it will be very important when you are growing, want to listen what you are saying. So when I'm saying how you are communicating values, it's not how you are saying about your values. It's what you do, what you show, what you talk also, but do you stay with it when it's not done? Or you are talking about coming on time and you never show up on time. And new people will very soon know that, time is not the value. And you will blame them. And you will have excuse for yourself. But be aware, that's hurting your culture, your values. And you don't have to have value on being on time. It's just example. So it's that you make conscious awareness. And that you think of those things early on, very early stage, because it will make a huge difference when you scale. And as Mihaela said, when you come to this gap point, selling to make or making to sell, that's the point you will have to reevaluate your values. You will have to do something with your growth, because the same beliefs and values you had early on can stop you from growing and achieving more.
It doesn't mean, I'm sorry to interrupt.
No.
I had that problem, myself when I was growing, learning, getting experience. It feels like if I start to change, I will be less authentic. And for me, being myself, being authentic, consistent with myself is one of the biggest failures. So now I have to do these new things. And how, this was a blocker, and this is a blocker for many leaders. Like I've done it before like this. Now I realize I have to change, but how, I'm inconsistent. You are consistent if you say, no, in this new environment, I learned, I want to change, I need to be doing different way because of this, and this. You're not trying to forget or neglect what you've done before. You treasure that, but you evolve. You treasure that bring you here. And however, going further means something new has to be applied or exercised or whatever value. So, and that's really, for me, it was a big thing.
It's for everyone.
Personally, to realize this, it's not a matter of, growth means you change your behavior, and it's not like you are not consistent. It's just, about seeing a bigger picture. Let's put it this way. Learning, saying, yes, I learned. I know today more than yesterday. This is why I do these things differently. And that's a great courage to first with yourself and then with others to be,
courageous.
Yeah. You need to do, it's not easy. So, seek for help, I would say, talk to people you trust to help you find this peace with yourself, really being authentic in that growth in a way. Yeah, it's not like lying or whatever. Yeah? However, be afraid of the situations. I've been living with some managers that yesterday he decided something, and tomorrow he changed his mind, and then he says, "Yeah, I learned the new information." And that's by no, you change your mind because it's opportunistic. It's not consistent with values. Yeah, you will not change from day to day. Kako vjetar puše, winds are blowing, you don't know, that means being authentic. And I heard many leaders, and that's why I was afraid, if I am I like that, so, there is a balance. It's not like black and white, and it's all grounded in a true, like, belief, or what purpose, purpose. Why? Yeah.
Purpose and values. And your identity, and I'll just skip those because you will have this, and both Michael and Mihaela were talking about this, and I want to ask Michael a little bit to cover this with some case study. But before, I want to share, it's not just for leaders, it's for every one of us. So I'm doing coaching for quite a long, 20 years. And there is one question I'm always kind of amazed by. Because people come to me and ask they want to change something, but they are afraid to lose themselves. So it's a very common question. If I change this, will I lose myself? And its identity is very high on neurological levels. So changing behavior, if I think it won't be me anymore, it's very hard. And there is one trick in question I always ask people, and I want you to ask yourself in a situation like this. Whose idea or whose will or goal was this change you want to achieve? So how you come to this idea, I want to do this. If it's yours, please don't be afraid. Because if it's your idea, I want to do this differently. Who else you can be, but more of you? Because there is you, who you are, who recognize, I can be a better person. I can be more of me with this new skill, new knowledge, new behavior. So don't be afraid. It's not so easy thing to lose yourself, but it is if you compromise your purpose and your values. That's much more than behavior. So, you know, that's what I want to share with you, and make it, just be aware, be conscious. Without this awareness about all there is, you can put a strong effort in solving problems and change at the behavior level. That's what Mihaela was talking about. We are controlling results, trying to control results and structure and procedures. And it's a lot of effort. But if there is immunity to change, you will not succeed. So you have to look at higher levels. So chunking up to values, identity, and purpose allow different possibilities to emerge with stronger feelings. So our values always are connected. We are feeling our values. So it's makes passion. You will be motivated. You are not tired when you are working on something that's creating value. You admire and it's yours. So small changes at higher levels. So if we are just adjusting our purpose and values, have a huge impact on lower levels, that means behavior and even environment. So just be aware and conscious of this. And Michael, if you are with us, do you want to back up this? You have to unmute yourself.
Thank you, Goga.
Okay.
I just to say that this was the model that Steve Jobs used when he went back to Apple in the mid-1990s. And he used this model explicitly, and he used this model basically to rebrand Apple after it lost his way, after he'd left. And one of the things that's really fascinating to me from an investment perspective, and also a student of NLP and a student of this particular model, is that there was nothing inevitable about Apple being successful when he went back there. Because when he went back, it was 60 days away from Chapter 11. And most of the advice...
Just a sec, Michael. Do you know what's Chapter 11? So it's close to bankruptcy. So it's a phrase. It's not very common in Croatia. So this is why I jumped. Sorry.
So at that time, he was being advised either to close the business, to sell parts of the business off, and to really cut back and try and save the company. And it's an interesting mindset. And I talked about the challenger mindset earlier. And I think that one of the things is with the challenger mindset is it doesn't accept these things. It doesn't say, you know, we've got to cut costs. We've got to sell off the business. Because he's really saying that you can't cut your way out of this. Because once you start cutting costs, once you stop investing in the brand, you obviously lose your competitive advantage. So his solution was to focus on what we're great at and what we really care about. And to do that, he used the neurological levels, and the campaign he used was called Think Different. But he was very, very clear about his purpose and values. And that's what really saved Apple, was the fact that he had a challenger mindset. He wanted the company to be entrepreneurial, and he used this model to re-inject values and purpose into the marketing of the brand. And it is all about identity. And he asked himself a series of questions, and coming back to that thing about the brain that Goga showed, the brain works best in the presence of a question. And that's a very important piece of information, actually. The brain works best in the presence of a question. So whenever you have meetings, you don't want agenda items. You don't want to say, well, today we're going to talk about marketing, or today we're going to talk about sales, or we're going to talk about technology. What are the questions that you want to address in that meeting? And that means at a leadership level, what you're getting really good at is you're getting really good at asking the right questions. And so the sort of questions he's asking would be along the neurological level. So who is Apple? What do we stand for? What do we care about? And so using that, he wanted to invest in the brand. And picking up on a question from earlier, there was the comment around accuracy in an artificial intelligence business. And it's really kind of determining, well, where does accuracy sit in the logical levels? Is it a capability? And if you wanted to chunk up to a value, given Goga's previous comments, if you want to chunk up to a value, you know, what's important about accuracy? Why is accuracy so important? And so can you see, if we ask that question, we might say, well, accuracy is so important because it allows the drug to, and I'm making this up because I don't know what you guys know, but I'm just making it up to illustrate a point. If we say, what's important about accuracy? Well, accuracy means that drugs can be targeted much more specifically to parts of the body, much more specifically and much more quickly to get the healing process accelerated. Can you see that now is a very different conversation than talking about accuracy? This is talking about your drugs will be infinitely quicker at saving lives, infinitely quicker at producing healing. So the purpose of an AI company where accuracy is a capability, I'm not disputing the importance of the capability, but who are you at an identity level? Where's your purpose? Your purpose is about, you know, really transforming lives, of creating life and bringing life to the pharmaceutical company, or more accurately, the patients or clients of that pharmaceutical company, if that's how the chain works. But can you see that when we're talking about transforming lives or transforming illness through accuracy, through real precision of knowing how the body works, and through artificial intelligence, we know precisely what drug to use at precisely what time. It's a very different conversation. To me, it feels much more empowering, much more powerful to tap into the values, purpose, and identity than, and I get it. I get the fact that getting that accuracy is a lot of hard work. And that's really what Jobs was saying. In his language, we're not talking about bits and speeds and all of that. We're talking about the fact that, how he puts it is that we know that people who use Apple in some small ways or in some big ways transform the world for the better. You know, that's the driving belief, that's the driving why of that. And so I think it's very interesting, you know, that small model has enabled that company go from $10 billion of market value, virtually on the edge of no longer existing, to being the company that it is today, one of the largest, I think it's certainly in the top 5 largest companies around. And a lot of it is around that brand. But more specifically, it's the alignment along the logical levels. So we're not saying that the capabilities are not important, they're crucial, but they have to be aligned with the values, beliefs, identity, and purpose. So it's that alignment that you're really going for. And it's great if you're starting out, because you can build this into your DNA, you can build this into your culture. And that gives you a really, really powerful way of driving competitive advantage. But, you know, I just wanted to flag that because it's you know, it's a model that really has transformed both his business, and you could see from some of the slides around Southwest Airlines, it was a very influential part of their success as well. Goga, I don't know if that's shared the information you would.
Thank you. Thank you. Now we want to make a little bit longer process. You can read something for whatever you want, and we want to start at 2, if it's okay with you, with Q&A section, and prepare your questions. Your question can be related to what we talk about, and can be whatever is on your mind, and you can feeling that 3 of us can answer and help you at this stage with your business. Okay, so see you at 2. Have a nice break. Until now, Michael, it's 1.
Yeah, thank you for the reminder, because I could have,
So see you at 1.
I could have forgotten that. I could sincerely.
Yeah.
Thank you.
Hi, see you.